Funding dashboard. And this has been going on. A lot of you that have been texting me saying you want to buy an account, but you don't understand what is actually happening. Yeah, it has been happening like that. They are doing updates, so this is why this has been happening. There's no product for you to be able to choose from to make purchases. And today, I think this wasn't happening yesterday, but today when I came up here too, this is also not available for now. All right. So let's quickly go on their Telegram and let's listen to or let's read what they had to say about it because they actually dropped a message on the 10th of how my schedule has been crazy. I've not been able to update you guys what is actually going on with the prof. Okay, so this is their Telegram and this is the ambassadors ends. So it said, dear traders at B Funding, we are committed to offering praises and praises to celebrate our first year anniversary because on September 16th, commemorating this first year of great achievement, we will unveil some big news. We are excited to share with you some advance and improvement that will further strengthen the platform. As part of our improvement process, we will temporarily limit the purchase of new programs and some features to ensure that updates proceed smoothly and effectively. It is important to note that this measure will not affect those who already have an active account. Your account will continue functioning normally. We appreciate your understanding and patience during the process. Our goal is to ensure that improvement, result in blah blah blah. So they have been doing some kind of update. I think this update have been lasting from the beginning of the month because I think on the 4th someone reached out to me. I was like, bro, I'm unable to buy an account. And I also reached out and then yeah, she confirmed it that something is they're actually doing update and they cannot give time they're going to finish it. So it's going to take a while. I saw this post on their, Telegram. So you can also look at their Telegram. I saw this post on Telegram saying up to 200k because they used to only give up to 150k, meaning they're actually doing stuff. And I was like, is the update done yet? She said not estimated, meaning they don't actually know when it's going to finish, but they are doing a lot of updates. So it is not a fraud. They have not shut down, and um, they are working to make things easier and better. That is why you see the website like so. And why I'm getting excited a little bit is because of what I read from. Let's go back to the Instagram post. What I read from the Instagram post. You can see earlier we used to talk about payout from them or withdrawal as 21 days, but you can see they are talking about 14 days here. So meaning actually they are really doing something that is going to be favorable to all of us. If you're getting paid 2 weeks, it's better than waiting that whole 3 weeks. And here as well, you see the lead period daily, whatever, whatever. So they're actually doing stuff. This was not how it is. Well, we're going to talk about the consistency rule. This is the rule that I've got everyone asking questions, and this is the rule that is actually making the account or the program account really, really a big deal. All right. So if you're able to bypass this rule, then yeah, you get paid. Okay. But this rule is very, very complicated if you are actually not calm enough to understand. Consistency rule. I'm reading this. Okay. Let's read it together and then I'll get to explain. All right. Consistency rule, lot size consistency rule. The average size of your trade calculated at the time of your pay review is used to calculate the trade range. Okay, the range is determined by adding 100% to your average trade size to determine the maximum value and subtracting 75% to determine the minimum value. If your average trade size is 20 lot, this means that any trade that falls within the range of 5 lot to 40 lot will be considered consistent with your average trade size and is a normal trading day. The consistency rule applies to only the funded leg. So if you are trading the challenge, if you buy a challenge phase one or phase two, you are trading the challenge. This consistency rule is not applicable to your challenge phase. So you can trade the challenge phase anyhow you want. The only rule that are applicable to the challenge phase is the drawdown rule, which is not losing 5% of your account in a day and not losing 10% of your account overall. Alright? So let's keep reading. Trades that are inconsistent with the trading range are subject to review stroke deduction of the total profit split. So if you have a trade that is not within the range, the consistency range, they can review it and maybe deduct it as well. Okay, they're going to review it and they might deduct it from the profit split that they will give to you. Okay, so The lot size consistency range calculation is determined by all closed orders in an account from the first trade to the requested withdrawal date. Your average trade is the final number that is calculated once a payout is requested. To calculate your average, divide the total lot traded during the period by the total number of closed orders. After finding your average, simply multiply by 0.2 and 2 to find the bottom and the top of your consistency range. Note that partial orders, for those people who take partials, note that partial orders will be traded as separate orders, or treated as separate orders, for the consistency calculation, as the metric is based on closed orders. So if you open one lot size and then you are taking partials of like 0.5 or 0.2, they are going to calculate them as separate lot size. They will not add them together after the whole trade is closed as one lot size to be one lot. They're going to calculate it as 0.5 or whatever partial you take. All right. Now, if you pay attention to this, what we got to understand here is that the average lot size itself, you cannot know it before you start trading. It cannot be determined before you start trading. So planning alongside with it is going to be tricky. If you trade profile like 10 trades, your average lot is actually your first lot size that you open. That's what they take as your average lot. So the first lot size you open, you can't go below, I think, four. You can't go below half of it, and you can't go above times two, times four of it. That is for 10 trade. But for this one, your average lot size is only determined when you are done trading. So they're going to add all of the all of the lot size you took, like adding them. If you traded VIX 100 today, 10 lots, they're going to add it to all the trade you took 5 days ago to the one you're going to take in the future. They'll add all of it, and then they'll get one lot, and then they'll add number of trades you open, 1 2 3 4 till the last trade you open. Then they'll divide it before they can get that average lot size, meaning you cannot get your average lot size before you actually start trading. If you look at the consistency range calculation here, it said total volume traded, meaning adding each of your trade, the lot size of each of your trade, divided by trade executed, meaning they're going to calculate all the number of trades you execute, all right, will give you the average lot size. So you cannot determine the average lot size before you actually start trading to be able to, plan with it. The trading, what is one thing about Profim, your trading plan on every Profim differs because of their rules. All right, so we are putting ourselves on the line, trying to, take advantage of their capital to actually grow bigger. But you actually have to bend your strategy, bend your trading plan to suit these things if you're actually wanting to do it. All right, so since you cannot get your average lot before you trade, there's no way you're going to use any lot sizes, and then you will be rest assured that it's going to be within that range. Then they said to get the lowest part of your consistency range, you have to multiply it by 0.5, and then to get the highest part, you have to multiply it by 2. They're trying to say that whatever is your average lot size, you cannot go more than divided by 4, that is 0.25, and then more than times 2 of it, which is, multiply by 2 of that thing. But since you cannot determine that average lot size before you start trading, it means that the easiest way to stay away from this particular mess is to keep your lot size fixed. If you keep your lot size fixed, the average lot size will also be fixed, because your lot size will be fixed. If you keep your lot size fixed, that is the reason why I told you guys in the first video when I talk about the rules that I'm not going to talk. I was not going to read through like that. I just did, but I'm going to tell you how to bypass it. The easiest way to bypass it is to keep your lot size fixed. Now, if you know how to trade, you should also know how to trade not just one particular thing or one type of thing. All right, so we have the synthetic index market, which is why we are focusing on this Profim, right? So if you are able to trade, if you trade volatility index, you should be able to trade all of them, not just one type of one of the volatility index. If you trade boom and crash, you should be able to trade all of them because they behave alike. All right, and since they behave alike, there are indexes within them, within those subsections of the synthetic indexes. If you trade jump, there are indexes within the jump that has lower lot size. There are indexes within volatility index that have lower lot size. There are indexes within boom and crash that have lower lot size. So anyone you decide to start trading, make sure you stick to those ones that are able to cater for your trading planner to help you to bypass these things. Now, I gave an instance in the previous video when I spoke about if you are trading something like VIX 25. If I'm trading VIX 25 on this particular prop firm, I'll be trading VIX 25, I'll be trading VIX 10, I'll be trading VIX 10 1S. The reason why I'll be trading this particular index is that their lot sizes rhyme. The minimum lot size for VIX 25, VIX 10, and VIX 10 1S is 0.5. Lot size similarities, right? The first thing you have to do is to determine your risk in dollars from any type of account you buy, any amount of account you buy. So let's say I'm going to keep my risk to $50 on any trade. The highest I'm going to risk is $50, and my lot size is going to be always fixed to 1, meaning that if I am trading VIX 25, VIX 10 1S, and VIX 10, I'm also sure if I think a lot, I'm going to get other indexes that will actually fit into this particular trade plan. I'm going to be risking $50 at most, okay? Meaning that whatever trade I'm going to take is going to lie within stop loss pips of 50. Because if I use one lot size and then my stop loss pip is 50, meaning I've risked $50. All right? And then let's say we get stop loss of 40, 30, 10. My lot size is going to be fixed. My lot size is going to be fixed, one lot size. So you have to get a maximum amount of dollar you are willing to risk, and then you play along based on what the pips is telling you. So if I get any trade that is more than 50 pips, any trade that the stop loss is more than 50, I'll stay away from it. Based on my trading style, you all know 50 is outrageous to be a risk anyways. 50 is outrageous because when we filter down your entry to the 1 minute, you're going to be getting stop loss like 10, at most 15. You know, so I can even decide to put my lot size at 5. I can decide to put my lot size at 5. I can decide to put my lot size at 2, 3. And I know that anytime I'm trading 10, 25, and 10 and 10 1S, meaning I have 3 indexes on my list and I have a watch list. If you have up to 3 indexes on your list, trading the way we trade, like on the lower time frame, you're definitely going to get trade a lot, you know. So you're going to keep your risk fine. So the easiest way to bypass these things is to keep your lot size fixed, and then make sure that the amount in dollars you have determined that you are going to be risking, if the pips count on the stop loss of your signal is more than that will make you to shift that lot size, don't. If the pips count is lower than that, of course you can take a lower risk. So I have determined I'm going to be risking $50, right? And then I got a pip count of $20. I'm going to still put my one lot size and risk only 20. It's cool like that. But if my loss size for stop loss, my stop loss pip is telling me that I have to risk, if I use my fixed loss size, which is 1, and then my pips is telling me 60 pips, I won't open the trade because it is more than my $50 trade plan. So if you have a good trade plan, you'll be good with B funding. But if you don't have a good trade plan and then you are randomly placing loss sizes based on you think that this is going to be a marvelous win, this is going to be a perfect setup, then you cannot trade with this prop firm. To get an account, look in the link in the description. Join our free Telegram channel. Link is also in the description. If you want to reach out to me, link is also in the description. Thanks for watching and stay highest.